Hello, YouTube. Nick here, back from the trip to the holidays. I need to change one thing here, which I forgot to change earlier. Where is it? Anyway, so the get together was awesome. And as a result, we had a great time. We got to know a few people better. Thank you for showing up. Those who couldn't make it, sorry, maybe next time, if there is a next time. It was a lot of work. Thank you, Arlenis, for putting it together. On to tonight's session. So I promised you some good stuff today as far as teaching support and resistance in 2 minutes. I'm going to cover how to find support, how to find resistance, and show your real life examples from today and how it applies to any time frame. All right, so let's get started. First things first with the actual futures. We should have opened here. Let's see here. I'll show you my charts. Actually, I'll show you the whole thing as a chart. And this is the S&P E-mini, and let's focus in on what's going on. First things first, the big picture. The markets are near all-time highs. Yes, say it again. The markets are near all-time highs. Just look at the Dow. And we have, if we look left, these are the battles from the summer of this year. And the box, the yellow box, shows the battle that was epic back then. Now it's a little bit different because you have a few more recent levels to pay attention to. So let's focus on that. As far as trading the futures themselves, you have to know a little bit of charts, especially if you're trading fast. Okay, so the idea is to first find out where your action points are, and those are support and resistance lines. At the end of this session, I will show you how to find them if you don't know how to do that already. Most futures traders in our group definitely know how to do that. That's how they got to be in the class to begin with. All right. So here we have support at 45-ish. We have a lot of tails, candles, and we have backup support to it at 45-36.75. If you want to round, 45.36 would suit you better than 45.37. The first place where we can hiccup is at 45.86. These are the ES, not SPX, if you're used to that. And we also have a bunch of sellers probably willing to show up above 45.93. So over there, you could pick a line in the sand if you want to. For me, I would pick 45.98, and that would be the heaviest point of volume inside that cluster up there. Other than that, those are the immediate levels. Now, if you need backups to those, you will have to step down. And if I want one aggregate line for the S&P futures, it would be at 45.20. This would split all of these volume sessions here. So that's the S&P. The NASDAQ, if I wanted to zoom out and look left, it's in a little better shape than the S&P. A few boxes can move the NASDAQ really big. If you look today, the scoreboard in the morning was kind of greenish. But if you looked at the heat map, it wasn't. It was just like 4 or 5 boxes that were green. And that's why the small caps were down a lot more. Okay, as far as levels on the NASDAQ, zooming into more recent levels, like the battles here, not looking back to the summer, we have sellers at 15,972, more sellers at 16,048. And I would pay attention to that line right there, because they already did themselves. This is easy to find, but this one I think is the more important one to look at. As far as downside scenario, you have a bunch of lines spread across, and the one that you absolutely need to hold is 15,722. If you lose 15,722, you might lose another 200 to 250 points really quickly. So that would put you in the 15,500 area. All right, so looking at that, that's what we look at. That's what could happen. Let's go to the RTY. The RTY are the small caps. So if you're thinking RUT, this would be the contract. The futures there, I mean, if you look back a few days, it's pretty strong. But really, to do it justice, you have to go and see where they're at versus the all-time high. They're slackers. They just bounced off of must-hold levels, and now they're about halfway. From here to here, about halfway. So this is where it's a natural rest. But it's not the end of it, because they've been buying dips, right? So we set the stage. So I would expect a dip, but let's see if I have actionable levels. 1872 to 1880, sorry, 1872 to 1878 is an important zone where I think sellers should come out. And the bears need to break down from 1855. Really, they're by 1852, but 1855 could serve as a visual catalyst, and they start selling rallies inside of a descending channel to eat half of this rally here. Um, there was a day where it rallied 3% in one day. From low to high, it was more than that. So those are not normal, and they shouldn't hold up. Yeah, 3.62 is almost 4%. So let's say they get back half. So I would pay attention to 1833, 1834. All right. So this is what we have on that front. As far as minutia levels, I don't think it's going to pay that much, but you want a level 1847 would be important. On the way up, 1876, if you want one line, because to me, it's played a role across the whole top, and it could be pivotal. Now, there's one more futures contract that we can look at here from the indices perspective, and that's the YM. That's the Dow. This is an interesting one because it's weird. If Apple is up 3%, there are other stocks that could wipe it out as far as its effect on the Dow with being up 1%. So like UNH, for example, because it's a price weighted average. So be careful trading that guy. 36240 to 248 is where the first wave of sellers. But if you take that out, I think they might have enough to take out the real big sellers that are obvious here at 36.3. And above here, gone, right? The Dow is almost at all-time highs. That's incredible. Now, on the downside, you have 36,060, and you have backups to it. And the backups are pretty strong. Look at this size candle and these. And then you get this, which is kind of a frothy rally. So just like the IWM, because they rallied so fast, they can give it up pretty quickly. And the rally involved a bunch. Like banks were contributing. I don't know about oil. Speaking of oil, we can look at the CL as well. I've been pretty bearish on CL, and I've shared that. And now they're in do or die situation. Well, not die, but they are selling rallies, and they must recover this neckline that they're trying to lose. So they lost the neckline here, one here, and there's this one. Well, the problem by losing this one, you will most likely trigger that one, which will be an incredibly unbelievable feat for the bears to take out. And if you do lose that one, we're talking like 50s and 40s. Now, this is putting the cart before the horse, and this is a daily chart. Okay, but this is what's on the line. So let's zoom in and see what we can do with that. We know they're selling rallies, so we should be in that mode until you hit a floor you like or an extension you like. I don't have an extension I like, so I'm just going to go lower highs, lower lows. That's my assumption. So any rallies into 73.50, I would look to fade. So if I'm a trader and we get to 73.50, this is where I would engage short with a stop. The stop can be an amount of money I'm losing or a level being taken out. I would be cautious if they take out 74 too. Then they might take this out as well, which is at 74.70. So I don't want to be on board short. As far as how much money to take out of it, the rally might get you a retest of from wherever they start that rally, so to 72 and a little bit lower. Just look left and see whatever level you like. For me, when it's that old, I don't like anything. So I would just short the rally and stop out if it doesn't work. That would be the mode I'm in. All right, having said that, let's jump into some lessons. Let's see here. First things first, we got to put up a reminder for you to do what? I need you to let me know if we are doing well. So you need to subscribe, first of all, to the channel if you're not already subscribed, and set the bell and give us a like. We have a small group today because I didn't have time to advertise. So hopefully we'll get the most of it. We'll make the most of it. All right, let's see. We have ways to find support and resistance. I promise you I would do that. So this is today's, some of you might recognize this chart. This is today's price action. Okay, so looking at charts, this is a 15-second chart. It doesn't matter what the time frame is. this could be a daily chart looking at a whole year's worth of data. I would come to the same conclusions. Okay, so it doesn't have to be a certain time frame for us to find support and resistance. Let's say I'm a trader and I'm looking at this period of time and I want to trade it for another 2 weeks, and these are days, and I can come up with the same conclusion. First thing in the morning or in this period of time, we had a rally down below, and we got to a level where that chart, whatever it is, found sellers. So it was rallying into a prior fail. So I would look to the place where it failed from last, and you can see a tail, and that is the end of the rally back then. So as we approach it, that would be a place where I would expect resistance. Okay. For example, here, as it was rallying, I would look left, I would find similar levels. I would keep looking left until I find a level. If I can't find a level, I'll scroll left in order to find a level. Otherwise, I would say there is no resistance that is recent that I can use. Here, I would look left, boom, there's a wall of resistance right there. And if you want one line, go to the highest one and you can pick up the value. In this case, it's a nice round number of 457 for this stock. It doesn't matter what it is. So if price is approaching that level, I would know what to do then. If I'm short, I know to expect some relief. If I'm looking to go long, I would say, wait, we're going into a prior fail. That's resistance. Why would I want to go long here? Let me find a better spot. Where is a better spot? Where there's support. So if it's falling from here, I look left and I find the most recent candle that has had a turnaround. Up here, this was a most recent candle that had a turnaround. Here, the most recent one, as we're falling, it's this one. So I would expect as we're falling into this candle, I would expect them to find support. Why? Because that's what happened last time. They fell from here to here and they bounced. And they're falling from here to here, and I would expect them to bounce. All right. So that is resistance because that's where they failed before, and that is support because that's where they found support before. Now, I keep respecting that until the market goes through it. At some point, they go through it. For example, here, they came to it, they went above, and then they tried to bring it back down, and they said, no, we can go above, and they made more progress. Eventually, they got tired and came right back down to the same level thereabouts. So up here, I don't have enough information to judge where they're going to stop next once they take out the visible resistance that we had. So I would zoom out and see if I can find other points. So let's see how it would have worked here in today's action, this action here. I'm going to unhide the arrows where we could have acted on. And I added these arrows to visually set where there were resistance and support. Back here in the beginning of the day, the rally at the open ran into a prior failing zone, resistance. They tripped up a little bit. We actually traded this. It went up again, and it didn't, they stuttered there, and then some headline came out and everybody got all excited. The headline was meaningless, but everybody all excited. They went up here. And if you looked left, that's resistance from the day prior. So why is this resistance? Because that's where they failed the prior day. So this was a tradable short, and we did that twice or three times today. Boom, you made money. They rallied again, shortable again if you had the right stop, because that's what happened again. Look how many times they bounced off of support. This area is support because we already discussed it. Why? So just knowing the levels of support and resistance gives you an advantage as to the decision-making process. And by the way, remember this happens on any time frame. Now, I'm hiding the time frame here because it's super fast. It'll scare people away. This could be days and days in between these. It could be weeks, it could be months, or it could be minutes or seconds. Okay? The concept is the same. Before I act, I should look left and figure out what happened the last time we were here. And if I don't have any significant level, I should look for the level that has a turnaround. So here, That's a turnaround point. Same with this one. So then now I know anytime they come here, it's going to be a battle. If we're going into it, it's going to be a resistance. If we're falling into it, they're going to try to be support. All right. So this is support and resistance. And with that, holy moly, out of time already. Dang it. I didn't even get to read the comments. Well, thanks for being here. I really appreciate you. And thanks for supporting us. If you don't subscribe to the channel, do it. It's free. And set the notification bell. And if you like the video, give it a like. Discuss in the comment section. It's open. We don't restrict it. I don't think. So it's open for discussion. Just keep it clean. This is a family channel. All right. Ending the stream. Thanks again. Bye.